contractual relief for JetBlue to implement a partnership with American Airlines, JBLU. A report in mid-January said JetBlue and American were in advanced strategic alliance, or had advanced their strategic alliance following a regulatory review. Qualcomm, Appaloosa, their quarterly holdings noting a new stake in QCOM.
All right, let's see what I'm going to put on here.
A loss of 79 cents. That's better than the 88-cent loss that was expected for ARQT. Arcutis Biotherapeutics company says NDA submission for topical Lumest as a potential treatment for plaque psoriasis anticipated second half. Based on all the latest developments here in the US. Evaluation of technology, I think healthcare. I think you're going to continue to see ARN Ellington residential mortgage rate reporting 60 cents. The estimate was 35 cents for ARN. CDX, Chevron, Charlie Victor X-ray, Chevron, spike near $96 now on Chevron, CDX, Chevron spike here. We come back and we'll talk to the CEO of IMAX about its monster weekend at the box office. Key thing was driving ticket sales. Plus, we'll discuss the pandemic.
So for Chevron, CVX, Berkshire Hathaway, their quarterly holdings noting a new stake.
Buffett, Chevron.
You could think getting commission-free trades is as good as it gets. You know better. And Schwab, free means more. You get commission-free online.
There's no PayPal, which had been rumored to be a potential new holding for Berkshire, not in the 13F filing.
What?
Also profit share $53. Michael.
All right, what do we got here? We'll get rolling in 2 minutes. Yeah, Mason, interesting day today. You know what it is it depends what type of player you are, you know, because it's a lot of repeat names at this point. You know, Mark has been so strong, you're not going to get new names every day, you know. So if you're looking for new names, you get slim pickings. There were several reasons. If you look at the post trade that I posted, there was a write-up and he broke it down. Had to do with positioning, I think. Coming out of Fed OPEX and stuff, if I remember correctly. That they're underexposed and they're going to have to put on new. I wanted to, kind of got away from me a little bit. You know, I've been playing some of the stuff intraday. I haven't really got a chance to put my hands on anything. in the energy sector as far as positioning is concerned, you know? Yeah, we didn't really have too much time, and you know, since he opened his mouth, I mean, energy was strong even prior to that, right? Let me see something. We've been seeing action like XLE and stuff. There were a couple names I was interested in catching flow, like the CPE and MPC, and you know, look at these things. It got away from me already, you know? Yeah, yeah. They're talking about a big move. But you see it in the commodity space, kind of like what we've been talking about in commodities. You just energy is a part of it. You know what I mean? Like you can see across the board. We'll talk about it today, definitely. Let me mute these guys here. Oh, QS is out. If you guys are interested in that. I don't know what earnings they're going to talk about. I heard they're going to talk about, listen to this, the year 2028. Okay? 2028. So, I mean, you want to try to make sense of this quarter, good or bad? I mean, they can dress it up and make it look as whatever the hell they want. No, 2028. Yeah, so all about reaction. All right. So let's get going. Anything interesting happened, somebody shout it out and we'll take a look. All right. So where should we start? Let's start first as far as big picture, what the hell's going on here. All right. And I'll update you guys on kind of the main things we've been looking at. I also have the Goldman stuff here. And for those of you who, like myself, may have thought these Goldman indicators were broken in the second half of them, you're starting to see some movement. You know, we haven't really seen much movement on the bottom half, right? So the bottom half, the top half of this is more of shorter term option related positioning, right? So spec action in a sense. And yeah, this has been bouncing from neutral to hot for a while now, right? So as you can see here, well, this is the consensus of everything. You can see here, everything again on the shorter term spectrum is hot. And now we're starting to get some of these positioning and intermediate term indicators starting to move a little bit, right? These actually have moved the most. They were neutral now. You know, they're pushing to risk on extreme. All right, so something to keep an eye on. You know, as a lot of the, especially the options related sentiment out there has been, you know, fried for a while, ever since the virus, basically. You know, a lot of people are keeping an eye on positioning and looking for that all in to where maybe that dip buying dries up. All right, so not there yet, but we get closer and closer, you know, each and every time this market pushes higher. This is their risk appetite and momentum indicator. And this is looked at a little differently. Now, some people look at it as an extreme here, which it is. But the majority of people I know who follow this look for it to roll over. All right, because a lot of times you'll see this thing poke its head up into the extreme area when things are at its hot point, you know, when there's aggressive speculation out there. But usually a bearish sign is when this starts to dry up and roll over, meaning the risk appetite is calming down out there, right? We've seen a risk appetite like I haven't seen, yeah, I don't even remember, honestly, in the 90s seeing an appetite for speculation in general. like we've seen post pandemic here. It's been insane. And again, the option market now is bigger than ever. In my opinion, the option market's more popular than the equities market, right? People like me who like to play equities, we're a dinosaur in this game. It seems like everybody plays options now. So, yeah, I'm sure that has a lot to do with it. But, again, something to keep an eye on if it starts to roll over here. All right. And we'll keep an eye on those Goldman indicators. We look at them every week. And that's what we'll be looking at. Some of these bottom signals here. You can see the blue and the light blue and the orange diamonds are where they were a month and 3 months ago. All right. So you can see, the top here, you get some movement here, not as much, but starting to move a little bit. All right. So that's kind of where we are as a whole on the sentiment side. A couple of the important things we've been looking at, the Fed and liquidity, that trumps all right now. There is nothing on the horizon, especially at a Fed speak, comments out of the FOMC, that's drying up. As a matter of fact, as you guys know, especially those of you who are members, we've been talking about this influx of liquidity that came in last week would only add more fuel to the fire, right? And it looks like it has. All right. Supposedly that the liquidity, the new influx of liquidity that's coming to the market will probably dry up around April-ish is what they're saying. All right. So that's the liquidity end. The Fed, they haven't budged. Nothing seems to faze them. They're okay with dealing with some of the speculation out there in regards to Bitcoin. Guys, the GameStop, the weed stocks, all that stuff, as long as the air comes out of the balloon and it costs people money at the end, they're okay with it. What they're not okay with is it when you get the riffraff crowd piling into stuff and all of them are swimming around in profits and it keeps going, right? That's why, again, I don't think a lot of people realize how how notable of an event that GameStop situation was, right? Not just GameStop, AMC, a couple others. That balloon being in, the air coming out of that balloon and, teaching retail kind of a lesson in itself, that was a big deal. You could see how the market snapped right back and people were grabbing, scrambling for exposure again in the equity market. So it was a big deal. If that would have went on for another week, I don't think you guys realize how close we were to probably at least a major hurdle in this bull market. I know it sounds crazy. You've heard even now a lot more intelligent people than myself, right? You guys saw, I don't know if you guys saw Muhammad Al-Arian talk about it. A lot of more intelligent people than myself talking about it. So there was a reason I was really concerned about it, and a lot of others, but it worked out. Okay. Same thing with the weed stocks. If you remember, we all participated, we made money, we locked in some profits for the most part. And, we spoke a little bit about how this needs to end now. This needs to at least come down and cool off right now and teach people a lesson. You can't just pile in and make money. It's not that easy. And when it is that easy, that's what gets the Fed's attention. So that worked out perfectly. Okay. And as much as you think Bitcoin is at that level, yeah, and it's coming from somebody who, if you guys remember Bitcoin the first go around, we're not there yet. We're not where we were the first go around in Bitcoin, right? The first go around, as far as Bitcoin was concerned, that was GameStop, right? You got that same feeling. You went to go put gas in your car, the gas attendant was telling you about it, right? You went to your cousin's house, your aunt who never played stocks before was telling you about it. When you start to hear that chatter around you, that's when you need to get worried. So we're not there yet, second go around Bitcoin. And that's going up for a number of other reasons, not just bubble. It's going up because, you got people for the first time, players out there who are trying to diversify funds because of what the Fed is doing. They're looking for other vehicles to park some money. They're not doing it in an extreme way yet. If they do it in an extreme fashion, then yeah, it's a whole different ballgame. But right now, you just got some companies out there taking some money, a few of them, and parking it in Bitcoin as opposed to holding all that cash. And they have every reason to do it with the Fed thrown in the kitchen sink. All right. So again, we keep our eyes on all these things as they go. And for me, like the big warning sign is going to be when, again, that GameStop incident, that Bitcoin feeling the first go around, when you see that, when you start to feel that in the overall market, that's when caution flags need to go up and you need to pay attention. That's all. All right. Here's the other thing we've been looking at. Hedge funds, which have been thrown around like yo-yos these days, right? Even the riffraff had their fun with them. They were forced to cover first they got short, okay? Then they were forced to cover shorts out of fear of getting squeezed. And since then, they've been scared shitless, excuse my French, to do anything. All right, so that's bullish. That's net bullish, right? It can work two ways. I sound like a broken record, but this is the stuff to keep an eye on here. One, if you get this, if we go that 2009 analogy where you get that slow grind, melt up type of thing, right? And you get them, you force them to chase, that will be telling in itself, right? Because once they're all into a chase, into the highs, the likelihood is there's probably a major correction coming, okay? If that doesn't happen, the read off of this is that every shallow pullback, right? And definition of shallow pullback these days, can vary. But I'm talking about, your run-of-the-mill 5% pullback like we've been seeing, the likelihood, the probability is that we're going to find dip buyers. Okay, because hedge funds aren't exposed. They need to find entries, and that's where they're going to look to find entries. Okay, the thing that throws a monkey wrench into this is if you have something, a black swan event, something goes on in the credit markets, something that's unforeseen that throws a monkey wrench into the game plan of looking forward to when everybody gets a vaccine in their arm. Right? So if there's an event that alters that view, right? And hedge funds decide to not become buyers on dips and maybe short into those dips, then, we can go into something a little bit larger, obviously. But without knowing what that is, there's no reason to plan for that, right? Anything could happen. So we deal with what's in front of us. And right now, what's in front of us, dip buying should be in effect. All right. And that's the main edge out of this. Okay. The wild card is they have to come in and chase a slow melt up, liquidity melt up like we've been seeing. They just haven't chased yet. And I don't know how much more time they're going to have if this thing continues to go higher without them. All right. So we'll keep an eye on it and see what the hell goes on. A couple things over the last few days that caught my eye in the actual markets. Today was really interesting, right? We've been seeing little pieces of it as rates have been creeping higher. Again, rates aren't storming higher. There's not runaway inflation out there. Anytime you come from zero, it's going to feel like runaway inflation. All right. But that doesn't mean it can't throw some volatility in the mix. All right. And every time you get a little pickup in interest rates like we've had, okay, at the least, you're going to see some major rotation that's going to create some confusion out there in the market if you don't know what's going on. Okay. Like for today, it was pretty evident that the market as a whole really wasn't going to go anywhere. Why? Because it felt like they were selling half the market to buy the other half. Okay. Financials, that was the place to be today, right? Rates higher, buy fins. Simple. And if you guys don't think it's that simple, it is. I mean, you got algos out there, machines running the world. They're programmed, just to take action on that. Simply put. All right. So you have financials that have looked good for a while now. We've been talking about probably the spot in 2021 with commodities, and they look good. Okay. Morgan Stanley, JP Morgan, Bank of America, Wells Fargo, you name it, you put them all in the same boat. Morgan Stanley maybe and JP Morgan on top of them, Goldman up there, and then right below them, Bank of America. Even Wells Fargo has been seeing a good amount of flow. Me personally, this is another miss on me, a story of my life. But what I really wanted to do is get my hands on some FAS and not even have to worry about, what bank should I buy, or I sold Wells Fargo, can I buy it back higher? You know what I mean? Just buy a little FAS and monitor it every day, right? With a stop loss, whatever the case, or even some calls. And, with a little time, I think FAS has a shot to be, the play of 2021. Kind of like when we were looking before the small caps took off and they were out of favor. And we were talking about like TNA being the spot, So that was my game plan. But as usual, I never really put it into action for some reason. All right. So the easiest way would be to play an ETF or something like that, or tuck away a name. You don't want to necessarily chase this now, but there'll be dips. That there'll be dips. These financials, that's one place we'll find dips. The other side of this is commodities, right? And you go, from an X, which woke up today. Alcoa's been catching action. All these names that already have rallied, and then there's been a nice breather there recently. Okay. The cherry on top of it all is energy, which has finally woken up, right? Looks for real. And you got, quant guru Kalanovich out there touting these energy names, and the whole group heating up starting in March. They're already heated up. Tom Lee, right? Permabull, Mr. Tom Lee, my man, touting energy, a big squeeze in energy stocks. So, I think the commodity as a whole, the whole group as a whole, I think is something we need to keep our eyes open and start to really pay attention, and so you guys understand it's. I hate to make it simpler than it is, but that's what it's going to come down to. If rates creep higher, right, you're going to see rotation into these, right? So think of financials and commodities, right? Those two big buckets is where you want to look, right? If rates recede, right? If there's a breather in the rise of rates, which can very easily happen, you're going to see money come out of these things, okay, and go back into the home builders, all the rate sensitive names, the high growth names and stuff like that. All right, so those are the two sides of the big trade that's out there right now. Remember, like back in the day was growth in value. Now it's this, high rates and low rates, right? And high rates being net bullish, but there's going to be up and downs. There's going to be up and downs. And when there's downs, they're going to go into the high multiple growth names. Now, when rates creep higher, like they have, if you're not acknowledging what's going on and you're playing these high multiple growth stocks that have been rallying for years, up at the highs and getting caught not knowing why, that's where there's risk. There's risk in these names now. These high growth names have risk. The higher rates go, the more vulnerable they get, in my opinion. And I think it's only going to get trickier there. All right. Underneath that, we have some pockets where we don't have to really pay too much attention to that big theme. And what I mean by that, you got speculation in small caps that I've been having a ball in. I know some of you have been having a ball in. A lot of you ignore it. You're not paying attention to it because you don't like to trade it. That's fine. That's why I'm talking about everything here, right? I'm not just talking about what I'm playing. But if you want to get away from the noise and the constant rotation and the gyration of the higher rate, lower rate play, you can go and pay attention to the flow and find some micro caps that are seeing steam and playing off the momentum there. Or when SPACs get hot, finding a SPAC you've been eyeing and finding an entry there. So it's kind of being more of a stock picker in a sense, the stuff, initial buying, new names, less risk. There's more risk in existing names that have been rallying for a while, but there's money to be made in all places. It's just a matter of your risk tolerance and what you're looking to do, right? Like look at this today. All right. We've been seeing action in this. You guys know the whole story. There's been action in this for God knows how long. All right. And, this is something, obviously, if you're going to swing, you should have been in already. Okay. But today, out of nowhere, all of a sudden you got like $8 to $10 million in sweeps come in the blink of an eye. Stock is down. There's possibly a trade there, right? Worst comes to worst, the momentum doesn't arrive off those sweeps. You take your small loss, you take your scratch, you move on. These days, with what's going on out there, a lot of these things catch a headline, catch news. And this thing caught news and exploded today through a couple halts, So, it depends what you're looking for. Like, I think a lot of people are getting spoiled out there. You know what I mean? Like I saw people today, whether they caught the trade or maybe they missed the trade or maybe they were in it, but complaining like CCIV didn't go to $100 today. Like, like 30 to 100 is like going up 50 cents. The stock literally 10 minutes after they were sweeping it was up $10, $12. And people were complaining that the stock didn't go to $100. So, people like that are going to lose money and they're going to get hammered at the end. We got to try not to fall into that fray. We got to try to have some discipline and stay away from that. But there's money to be made on the in-between, right? There's money to be made on the in-between. And if you focus on the in-between, there's less risk. I think the more you want, the more risk you got to take on. And that's fine too. But, you got to be aware of that. In other words, like, I'll give you an example. If you're sizing up in a CCIV off the steam that came in today, right? You're looking for the quick move. You're going to get the hell out, take what the market gives you, no harm done, right? If you're looking for the big enchilada, okay, you size down, buy some calls, put in what you're willing to lose. And then, if you lose that $10 rip, it's not the end of the world because you're not going to get lumped up. You understand? So you got to pick a side. You got to have a plan there. You can't have your cake and eat it too. You may get away with it a couple times, but at the end, I promise you're going to get lumped up. You're going to get lumped up. There's no ifs, ands, buts about it. So we got to have an understanding of what the hell's going on. Again, new names, initial activity, right? Before these names heat up, that's where there's the least amount of risk. All right. When everybody's involved and everybody's in and the stock has been running already, obviously that's where there's most risk, right? Like the we names. This thing, was getting swept up, was moving, but wasn't really getting anybody's attention as much, let's say, and then a bucket of flow came in, exploded, the stock went from under $1 to $4. You know, I mean, if you're buying it at $3-4 and looking for 10, common sense, right? There's a lot more risk there. So we just have to be aware of that. Because trust me, I'm not knocking you out there, but I've been there. In this type of environment, you get spoiled. You get spoiled, right? Like the little moves from a year ago that you would have been content with and happy with, you're not interested in them anymore, you know? And you could get into big trouble if things slow down. All right, so these are all things I just wanted to mention off the top of the Zoom here, so we all have an idea what the hell's going on. All right, like a name I bought today that I held and actually was trading nice. I was up on it, but I said, let me take a shot and oops. This little piece of garbage. Yeah. All right. So like it's $1 stock. You know, if it goes to zero, it's $1 stop loss. That's how I look at it. That's how I look at it. All right. Maybe I get lucky. All right. If otherwise I could have sized up. I mean, it's $1 stock and, you know, took the 25, 30, whatever cents that it pushed off the action, which is 30%. So, you know, these days I've been more successful in this stuff, playing the equity, because I feel there's less risk there. You know, believe it or not, there's less risk there. Because if I buy a SPAC name, if I buy a CCIV, the equity, right, and decent size at 46, and I hold it for a couple of days and it comes out with some sort of headline, right? This stock could easily shave $10-15 up here and still look good. You know, this is late. So that's the way I'm looking at things. You know, that's the way I'm looking at things. It's kind of a more conservative way I'm playing right now. What do I think is going to happen? I have no idea. I don't even know. The only reason I'm in it is because they were buying the daylights out of it. I have no idea. You know, is this an inflation play? Does it matter? We're talking about they're buying the crap out of SPAC names that aren't going to show any revenue or earnings to the 10 years from now. It doesn't matter. They could be shoveling dog poop. I would have bought it. You know, I'm not going to overthink it. I'm either going to make money or lose money. All right? One or the other. And, you know, the newer names, I think the beauty about the newer names is that as long as what I've realized over the course of my career, as long as they're new names that are catching action that I end up becoming interested in, the music goes on. When the new names dry up, is where I've usually run into trouble in my career. Going back to old names and trying to find entries in those. You know what I mean? That's where, like when I have trouble getting caught, that's where I usually throughout my career would get caught. You know, if there's newer names that are catching action, you know, like example here, ITP is, right, the action came in at $1, whatever, $1.10, $1.15. You know, if things roll over, if this market doesn't look right today, tomorrow, whatever, you pull the plug at what, $1.90. You take a little loss and move on. Is that the end of the world? You know what I mean? Yeah, DNN, you know, that I sold that, but same thing. You know, same thing. You know, same thing. Right? And that's the thing, right? We've been talking about all these winners for a while now. This market's unconscious. There's going to be losers at some point, and you got to acknowledge that. And you got to look at a big picture and say, all right, this is where I made money. I lost this at the end, and net, not too shabby. You can't be doing the pyramid scheme. You can't, whatever money you made in GSAT, you put in DNN, they take all the money, then put it in the new one, and then take all that money, put in the new one, because when the one goes down, you're done. All right, but to me, these are less risky right now, as crazy as that may sound, than some of the other stuff out there because of the moves out there. Like give me names. Give me any name you guys like, well, off action or whatever. Give me names, and I just to give you an idea of why I think a name like this. What's that symbol again? I keep forgetting the symbol. ITP. Right. I'll give you an example why I think like there's less risk there compared to some of the others. BTWN. Like, okay, here's a good example, right? BTWN. We spoke about, right? This thing was a killer trade. All kidding aside, I made like $2.90. A few of you too did in one day with this right here. Okay, so now I could be sitting in this, right? I could be sitting in this. If these SPACs, which is, it's overdue for these SPACs to go into a correction. If these SPACs go into a correction, where do you pull the plug on this BTWN? You know what I mean? Where are you gonna pull it? Already, this thing trades in a $4 radius, right? I just mentioned that. We made $3 at a killer spot right here, right? Off action. So if you're buying BTWN here, you got to at least have $3 by accident. This thing doesn't even, nothing wrong with it with $3, right? Yeah, but see, Noah, you see the comment there, Noah? People who think like that are going to get demolished. They're going to get demolished, Noah. Every SPAC has a sexy story to it, but that's all they have is a story. You understand? If you say, I'm just buying BTWN and I'm holding it because Peter Thiel has it, what are you going to do? You're going to ride the stock, you're going to ride this thing down to $2 and get demolished? I could say that about every stock, every SPAC out there. Every SPAC. You understand? So that's what I've been doing. I trade them, like I've been solely trying to day trade them, maybe hold it an extra day type of thing and get out. At this point, a couple of months ago, I was swinging some SPACs, as you guys know. But now it's frothy, man. There's a lot of people, there's a lot of retail money in this crap right now. If they go into a correction, there's going to be some black and blues out there. And a correction would be normal. You guys don't realize, like when that whole IPOB and IP whatever, when they came out, you don't remember the correction they had, these things? They had a decent correction. It would be healthy and normal for all these things to go into correction. If they don't go into a correction, it's like the point I made at the start of the webinar, then we're in big trouble because it's a bubble and it can take down the whole market. So you gotta have an idea what you do. Now, if you're telling me BTWN, Noah, is something you bought a little of, it's your baby, you're gonna tuck it away. All right, that's a different story. That's one stock. That's not a trade, right? That's an investment you tucked away. You're willing to lose money. You know your risk, whatever. You're not going to do that with many other names. Maybe you just did it with BTWN. But for me, I had no interest in doing that in the stock. And, where's my risk here? How do I control my risk here? Just sit in it, hope and pray? I can't do that. Not at this point in these things. Does it make sense? You guys know what I'm saying? Right? Nobody, and I'm sure like a lot of you, especially you don't look at these things, right? You're not paying attention to these things. But at this point, you have to at least start paying attention to this stuff. You have to. You have to. You have to. Like there's other names, we were talking about, okay, like FSR, right? Here, right, we had at least a game plan for the trade. If you were interested, if not, no, I'm done. You pass. But caught a little action, nothing even that impressive, but a lot of spec action. Okay. If you like it, you put on a trade. And if this thing does one of these jammies, you know you were wrong on your trade, right? You don't want to rely on luck. And then eventually, a month from now, this thing comes back and you got lucky. Woof, I held it and got lucky. You don't want a trade is a trade. So you had an idea where you're going to put on your risk, right? Decent spot. Here it is, pretty tight. If it breaks that, you're going to pull the plug and get out, right? There's another one, XL, right? Same thing. All right, we spoke about this today. The action hasn't been anything crazy. It's been a lot of action in this XL, right? But as far as a risk reward, pretty cut and dry there. Where you're going to be wrong and where you'd be right. So there's not a lot of these left. Like, that's what I'm saying. Give me some names. Go ahead. Maybe you guys have a couple. Well, come on. That was here's what I mean, right? Here. You had that trade. You got a $10 pop out of it. No good? Not enough, huh? I get it. Okay, not enough. $10 in a day. You know what I mean? Not enough? Now, you want to buy it $10 higher? I'm not going to do it. But you had a trade there. You had a nice setup there. Right? In my opinion, here you had a nice floor. This thing was really tight. Right? And you knew where you would be wrong or the flow would be wrong. Okay? Here, look at some of these names you guys are throwing at me. I hope you're joking. I hope you're joking. I hope you're joking. Like, what do you want me to tell you about? Are you serious with this Futu? I can't even look at this stock. It makes me sick. I don't understand how this happened in front of my eyes. And I didn't make $1 on this thing. How about that? But Futu was a nice setup. It was a really nice setup. As a lot of you in the room know, right? Quite a few of you played it right here off the action. But now you want to try to map out a risk reward up here? What's your risk reward here? Oh, Ryan, this was a beauty. This was a beauty when it got hit. But now, what are you going to do with it now? I don't know. You got to have a $50 minimum room for a stop loss to buy it now. Otherwise, you're basing it on pure luck. No? You guys agree? You really could, Joe. If you get lucky, there have been quite a few of them. You really could have made your life if you just got lucky by accident. That's what's sickening. You look at these stocks. You're 100% right. But you guys know what I'm saying. Futu, yeah, there's no way to map out a risk reward here. And, we run into a little breather in the markets, right? Just a little breather. This Futu could, can dump easy $60. This thing could come right here and still look okay, right? 120. That's $70. So, not my cup of tea, to say the least. What else? Anything else that Tiger? Yeah, these are monster winners you guys are talking about. Monster winners here. If you guys are in these stocks already at a decent cost, I'm not telling you to sell them. Don't listen to me in regards to selling them. I'm the worst. But what I'm saying is, to manage your risk, you can't play these things anymore for new entries. You can't. You may make money on a TIGR, but that might be the worst thing that happened to you, because then you're buying another name that's up 600% already. You understand? So, but yeah, the Ackman play is moving too. with a ton of action. What's the Ackman symbol? PSTH. A lot of action in that thing. But you see, guys, these are all, that's my problem, is that there's a lot of stocks that look like this. There's a lot. There's a lot of stocks that look like this. So I'm hoping, maybe we're probably going to need a little breather to set things up again. Yeah, NVIDIA, Joe, again, if you're in it, you're going to have earnings here anyway. But, if you were in it off this spot and you want to hang on to it, you're not going to hear anything out of my mouth. You know what caught some action today? Facebook, but it was into strength. But it caught some action. I would keep an eye on it off dips. Facebook caught some action. Facebook hasn't really caught a lot of action these days. So something to keep an eye on off dips. PCG, I think OT likes this name. Let me see. PCG, he was talking about it. Utilities, right? What were they doing today? I didn't even see what the hell they did today. Down, right? So wait a second. Rates go up. You sell utilities, right? You sell utes. And housing and mortgages. You got to be careful with these things. They're in that higher rate, lower rate spectrum. Like housing. What housing do today? I'm sure it was down, right? Yeah. You got to be careful. Like that mortgage company, remember we were talking about, RKT, where I don't see how this thing goes higher outside of a buyout. What with rates doing what they're doing right now. I don't care how good of a company it is. You're gonna have sellers every time there's a pop in this thing. You're gonna have sellers just off rates. There's nothing you can do about it. That's why it's not the time. Rates start to come in. If this whole inflation thing ends up being a fraud, you never know. 09 was. Then this thing could really get hot. But for now, it's tough. LMND. I haven't looked at this thing in a while, LMD. You got a little consolidation here. Let it consolidate. Big rip here too, right? So let it breathe a little here. But that's not bad compared to some of the stuff out there. That's not bad. Nat, this is interesting. I want to see some better looking action than today. They bought some Jan calls, nothing crazy. But yeah, for a cheap stock, this is something I definitely would have an interest in. These shippers, some of them have been catching flow too. They had earnings. What this thing do? It had earnings. Seabulk. Oh, they didn't have earnings yet? I thought maybe it was a different one. They look good, some of these shippers, these tankers and all. Salt is another. Let me see. Oop. Salt. I can't get the symbol. What happened to salt? Scorpio, that's STNG, right? Yeah. STNG. There could be a nice squeeze in these things too. There hasn't really been the flow. The best flow we've seen, STNG caught some flow, and this thing caught some flow. Actually, a couple decent sweeps Thursday or Friday. I like the sweeps, but there's earnings. For some reason, I thought earnings were today. Anyway, yeah. So NAT, if they come after it, I have an interest in it. Definitely. That's more of my cup of tea. INO. Yeah, this is a piece of garbage though. No, INO. Well, who cares anyway, right? But yeah, it was involved in that squeeze here and had a nice squeeze. But there hasn't been a whole lot of action after that. The other one that's had a lot of flow for a while, that was part of that squeeze, is SRNE. That's a little breather. Oh my God, Ram. Here's another one, Joey. 50 cents to over $5. Can you imagine that? 50 cents. You can't buy a piece of bubble gum for 50 cents. Tons. You talk about flow? Tons of flow. Tons. You know? Looks like it goes higher. I wouldn't buy it up here, but it looks like it goes higher and tons of action. I day traded that XIN. You know, honestly, I was quick to put on the trade. I got lucky. If it didn't explode, I probably would have held on to this thing. But because of the big move, I ended up selling it. You know, I ended up selling it. But yeah, it's a big move. It might have to digest a little. No, what was it up? A buck and change or something when it's all said and done? Yeah, the 1 minute will show it. Look at this. Bink, bink, bink. But yeah, I mean, buying it over here in this range here, I probably just need to hang out here a little bit, you know, do something like this and then go. They've been doing that. Like GSAT, remember GSAT? There's another one we had, right? GSAT. So here. So this is like where XIN is, let's say, right? Big pop, and you might see a little hangout here for a bit. You know what I mean? And then you should see it bust, have another bust higher there. See how it goes sideways for a little bit? That's what you want to see. No sellers. It's doing it again here, by the way. It's doing it again up here. Here's another one, GSAT. You guys know this well. Another one under a buck. Went to 2 and change. You know, but these are the things I've been playing. All kidding aside, these are all the things I've been playing. And I know there's been, you know, some nice winners and larger names, but like MGNI, for Christ's sake, I can't find an entry in these things. You know what I mean, Speed? I can't find an entry anymore. I don't know. That's the problem with me here. I can't find an entry. You know, this is what I would need, like we saw the first go around. And even there, I told you guys, I have trouble even pulling the trigger off that. You know, so it did it once. You had a nice little breather. A few of you played it off this breather, right? Caught some buying right here, a little put selling, and that's all she wrote. You know, that was at 24. It's at 50 now. And that's not even where we initially bought it. Nuts. But yeah, I love this name. I just can't, where am I going to find an entry? I can't find an entry. Yes, it does. I like this name longer term, you know? Beaky. I don't even think it takes as long. I think once it busts out, you're going to get a nice move out of it, Tree. You know, if you're willing to sit. If you're willing to sit a bit. But some nice flow in this Beaky. Really nice. Vroom. Big Bill, huh? You have a 9er here. See if it breathes now for a little. Yeah, so if you didn't get in, you want to see a breather. You want to see how it acts here. Because look how it acted last time off a 9er. So let's see how it looks in a couple days. But yeah, Big Bill, all Big Bill's plays. If they don't look now, they will. Oh, is it? LOTZ. I saw her sweeping that today. LOTZ. This is a decent spot. So this is like Carvana and Vroom. I don't know. Why am I screaming? Is it, Matt? Interesting. This is an interesting name. All right. So this would be like if this catches any sort of heat down here, I'm in. You know what I mean? I'm in. Like there's not even a question about it. I'm in. Not even a question. Whether I know what they do or I don't know what they do, it called one sweep today. I think it was a small sweep, unusual sweep. But I'm glad Matt brought it up. I'll keep an eye on it. We see another round of sweeper activity come in. I'm in. This I love. This is like the YSG spot. Speaking of YSG, you see who has been building a position in it? Tiger Global. Yep. This was YSG over here. See, these spots, I love them. I love them. But you guys see how many winners I miss, right? Because I'm waiting around for spots like this to swing. Are you still in it? Ryan, yeah, it's a good looking name. Now you got some real backing. You got some real backing now. Yeah, you can't play them all. You're 100% right, John. But to a fault, you got to understand. I'm at this a long time. Think about it, okay? I've been in this game for 20 plus years, right? And I would say, all kidding aside, at least minimum 15 of it, I've been trying to practice the same principles. You know what I mean? For all that time. So when you mold yourself like that, it's not, you know what I mean? It's not that easy to break out of it. Yeah, you're right, Trey. The curse of experience. And some people say it's a good thing. Don't get me wrong, it is a good thing. But, at times where I want to be more aggressive, I still have shackles on. You know what I mean? Like at times I want to be more aggressive. I want to be sloppy. I'm willing to lose in other words, to make money. I'm okay with it. And I still can't get myself to open up. That's the problem. So it's to a full. Again, a lot of newer traders would die for that problem. But trust me, you're in the game long enough, you'll know what I'm talking about. You're in the game long enough, you know what I'm talking about. I can't get outside my box. And true, like that energy trade is a perfect example. Kind of got away from me. And now I'm like, okay, what do I do now? Yeah, I'm waiting for that fat pitch. Exactly. I'm waiting for that fat pitch, but I shouldn't wait. I shouldn't be waiting just for that fat pitch every time. There are other things to do. You got to size appropriately. That's all. But what else? Anybody else have decent spots out there? Matt had a nice spot on that. Matt, what's that symbol again? I caught that sweep today. So I could just add it on my screen now so I don't forget to do it. Oh, yeah, lots. Got it. All right, anybody see any other action? These cruise lines were at a real nice spot. It was tough to get excited tough to get excited with these names. But they caught action in a nice spot, and they're looking good. You're not going to get a Futu move out of these things. It's not going to happen. But they're doing what you would want them to do if you're in it. Like RCL was at a good spot even Friday. Look at this. Yeah, there's definitely room. These things haven't gone anywhere. They haven't gone anywhere. What's NCLH was the other one, right? The 3. CCL looks the best, and it's been catching the best flow of late. I don't know why, but you could also watch them on dips. These things dip. They're notoriously known for dips, right? They dip all the time. So, DNN, you got to be in it already. If you're in it, you want to hold it and try to get lucky. Like we were saying, if you're in the equity, pick a stop. where you're, what you're okay giving back, and don't stress it. That simple. Yeah, that's fine, Tree. I mean, listen, but you can't buy and hold everything. I mean, for Christ's sake, right? What are you going to buy and hold everything? We wish we could, but it's not feasible. Some you got to trade, and some you like better than others. You got to you give a little more leash to. But yeah, this DNN, I wouldn't buy it here. If you're in it, pick a spot, what you're willing to give back, and take the stress out. You're in from $1.20. Oh, so you bought it up here recently, huh? Yeah, so you got a little bit of profit to play with there. Don't ride it all the way down. Which one? DKNG, you talking, Tree? DKNG. They didn't report yet, did they? That's the thing. You got earnings. If Kathy didn't buy it, I'd be like, wait till after earnings. You know what I mean? The problem is Kathy bought it into earnings, and that's usually pretty bullish sign. Yeah. Otherwise, I'd say wait till after earnings, but I really, this is tricky because of earnings. Tricky. Penn is catching some nice action here. But you call this is a dip? You know what I mean? Penn is seeing some big action. Again, I don't know. It could roll. We've been seeing flow in this thing for forever now. It's definitely the better one. DKNG is probably better spot wise. I don't know. Tough. Well, you think maybe buy some pre-earnings and then buy a little after and see what it is? That sort of thing? That's the problem. If you don't want it to get away from you, I think you have to buy some before earnings, Trey. You have no choice. If you don't want it to get away from you. Fastly, you have earnings tomorrow, I think. No? Yeah. Fastly earnings. So I don't know. I think if Fastly reports a good number, I think you're going to get a nice squeeze. But I don't know what the number is going to be. Nobody does. If Fastly reports a decent number, you get a nice pop. You get a nice pop out of it. If they shit the bed. Now, the other problem with Fastly you got to watch over the intermediate term is rates. High multiple stock may have trouble. Net, same thing. I know I've been saying it for a while, but if that theme we saw playing out today, you're going to see net heavy. When they're buying financials and they're buying commodities, they're going to come out of this. UBS was, listen, again, tough to get excited about this thing, but a ton of action that day. They bought the living daylights out of this thing. It's a bank. I think all these financials, do well, and I think you buy them on dips. I mean, that's the only thing I can really share with you guys. All these financials for the foreseeable future here, for the next few months, at least next quarter or two. When we get things like this, I think if you're interested, that's where you got to look to buy them. Yeah, Matt, that's my plan. That's why I haven't really pulled the trigger on any of the financials yet. If you get a breather out of the financials, I might just take a shot with this, and it takes out all the stress. All the stress. Oh, that's energy? What is that, 2 times? Wait a second. No, that's bear. What's the ERX? You're right, ERX. What's the 3 times? Where are my coconuts? Where are the 3 times? I have no coconuts left. My coconuts are down to little marbles at this point. ERX. Yeah. Commodities in general, guys. Commodities in general. You know, that's right. Like there's, see names like this, X. I'm trying to think of other names. Like this is a pig, but there's got to be others out there that can squeeze hard. Valet is a good name. Valet is a good name. Valet is a good name. But yeah, see, look, you see this here? Into a 9er, right? That's what we got to be looking for. So we can be patient. CLF, no doubt. No doubt. The CCJ. Oh, man. I didn't know that. That was a 9er here. I didn't know that got that crazy, CCJ. iPod is a SPAC. It caught some decent action. You know, that's all I know. There's a lot of SPACs, guys. I'll give you here. SPACs that caught flow. Again, if there's a correction in SPACs, they're all going lower. So understand that. We're at that point. The flow doesn't matter. If the SPACs correct, which would be net good for that thing if you want to continue to play SPACs. If they correct, they're all going to go lower. Okay? But iPod, this one, CGRO, which is still at a nice spot. Look at this thing. See, if this wasn't a SPAC, like if this was a normal company, you know what I mean? Off the action, I'd be in a nice position swinging this thing. I really would. I really would. But these SPACs are like, you know what I mean? They're I look at them as one right now. I don't like that. I look at them as one. But anyway, Segro had some nice flow. You know, we talked about Ackman that already hatched PSTH, but has been seeing nice flow. This one, you guys remember this one? Oh my God. I didn't see that today. STPK, one of the better looking names. This one we caught nice though. This was a quick winner. There's another one recently I bought a tiny bit of for shits and giggles. Honestly, I hope it don't go higher because I get more sick if it goes higher. What's the new one? There's a SPAC out there. I caught a couple blocks today I mentioned. TPGY, that's another one that's had flow. That had a nice move too. PSAC. Thank you, Kay. PSAC. This one caught some heavy duty action with time. You know, heavy duty, but look at this. Just, I don't, you see, you guys who are new, like, I guess it don't bother you as much. Me, you know, this thing was 11. It went to 21. Like, I would never look at anything that did this. You know what I mean? I would never look at a name after it did this. Like, if a name did this back in the day, this would have to consolidate for like 3 to 6 months. It's going to go bankrupt? There are honestly 90% of them, Kay, are going to go to zero. I think 90% of them are. So you're probably right. There's no way all these things are going to flourish. There's no way. It's not possible. You know, not possible. But yeah, this is another one that's seen some decent flow. All right, so you got this one that hasn't really gone anywhere since the flow yet, and CGRO is the other one. BTWN is the other one. So you got a few of them that are still hanging around in SPAC terms. Yeah, I just don't see a lot of these names making it. There's going to be a few of them. Like, Joe, think about the internet bubble. Okay. You know how many names went bananas back then and people thought would be around, real companies? You know how many of them survived? Not many. Not many. Yeah, again, company and the stock are two different things. When we go into legitimate correction and buyers dry up in these things, there's going to be no buyers in these things. You know what I mean? Now there's ample liquidity. There's buyers all over the place. When buyers dry up, these things are in big, big trouble. Big trouble. But the timing of that is the important thing. These things could have another crazy move higher before that happens. That's why I say, if you want this to last, you need all these SPAC names. You need them to correct now. You need retail to get hurt. I hate to say it, but to lose money, so they realize it's not that easy. And then I think you can have another big move out of that group. But right now you see, even on Twitter, reputable people touting their favorite SPAC play. It's a joke. It's a joke. So if you like these things, like, I think SPACs, as far as IPOs like that, are going to be around, but there's got to be a correction. There's got to be a correction in these things. I don't know when it comes. Yeah, Kaepernick, A-Rod, Dean, name it. Name the person, and they got their own SPAC. It's out of control. Shaq SPAC. Everybody's got a SPAC. Christ almighty. AMWL, I like this name. See, if you got earnings coming up, but I like this name. I like this name too. GDRX. BTWN is Steel. Yeah, I know. This is another name I like longer term. If we could see decent, I'm waiting on decent action. You could trade this thing for now. Yeah, but that's what I'm saying. You could trade it. You got to be quick. But my interest, I want to see some nice buying with time, and a name to like put away a little bit. Options. Oh yeah, the options are tough. Oh, to trade, the options are tough, right? I'm sure. Yeah, they're junked up, right? Yep. That's a problem with a lot of these things, okay? That's why I've been trading equity solely. SPACs, these SPAC plays, same thing, right? I can't trade the options in those things. They're tough. But I hear you, But yeah, I would like, I'll give you an example, like something into the summer minimum, and some decent size, because this name catches nice size. And I'd like to take a piece. Try to hit a nice one out of it rather than just a trade. I like this name. And now you're getting a nice little breather here too. You're getting a nice breather here. So, yeah, they can lay some nice wood. And I want them to go out speed time-wise. You know what I mean? I don't want like they've been playing front month, because they flip those. They flip them. And for the quick stuff, I like to play the equity. I don't like to play the option when I'm looking to be quick. It depends. For your options, the size of my account, that is done with. Like, the size of my account changes on a yearly basis, me taking funds out, putting funds in. But it depends. It all depends. But for people with smaller accounts, you can't use that same metrics. There's nobody, Dan, who can tell you how to manage your risk. You have to sit down and ask yourself the tough questions. You know what I mean? You have to. I can't do it. Nobody can tell you, oh, put 10% in this or only 5% in that. You gotta look at big picture wise, right? If you have more wins than losses, how do you want to manage your money around that? You understand? Like with people with a $10,000 account, they're not going to, the likelihood is they're going to put half, if not all, into one play. What are you going to do? You're going to tell them put 1% into a play? But it depends how much risk you want to take. For me, when I'm position trading calls, I like to ante up because I don't do it often. Later trade, and I'm doing it off top action with time. So I like to take a nice size position. But it all depends. It all depends. It all depends on the other stuff here. Anything TTD? No, that's been quiet. Still looks great, right? What a great stock this is. Later, Matt. What a great stock. Teladoc, there was some recent flow in. They have earnings coming up, so it could be earnings related. But yeah, there's been some flow in Teladoc. DT, after that move? Yeah, that looks good too, huh? I saw good Teladoc, Kathy, been buying out the years. Plan caught an upgrade too, right, today? That's been looking good. But yeah, DT I like. And, DT might go into some consolidation at some point. But I think the longer you can hang around in the name, you could get lucky in this thing. I've seen stocks like this. You guys know. I mean, ZS, it reminds me of. ZS was in that vicinity down here. And now look at it. ZS was, nobody knew who they were. It caught a drunken Miller sweep out 6 months. It was like 600 grand. Stock had a nice pop, then went into consolidation. And then when nobody owned it and everyone didn't pay attention, the stock went bananas. So many of them. GDS. Oh my God. I haven't looked at this thing, GDS, in ages. This one too. Back here, I think it was. See how it had some trouble, and then whoop, and then a correction, and a whoop, and another breather, and a whoop. NNDM. I haven't watched that either of late. Let's see. Yeah, breathing, huh? How many secondaries did they do? How many offerings did NNDM do? Jesus Christ. Holy cow. But yeah, still looks okay. Still looks good. If you're in it already, again, old news if you're not. What the hell is this? Oh, this is a cheapie. NNDM. I'm just realizing that now. So this thing was probably hot with this, right? The DDD and the rest of them. Wow. Another one that's been moving too, I remember back in the day, was red hot, SSYS. Look at this. Remember this with DDD? Look at this move. Holy my God. She bought this too, Kathy? Wow. I remember DDD and SSYS back here. They were bulldozers. Every day it felt like they were going up. Every day. You know? And look what happened here. Look how long they went up for, right? From 2012 all the way to 2015. And then look at this. Wow. And then look at this. I don't know what's more painful, this or this. At least this, you're getting bloodied on and you have some action. You imagine getting stuck in this? Oh my God. Yep. You know, I'm not trying to scare people. You're gonna have when the music stops, you're gonna have a lot of names looking like that. A lot. And it may not be the end of the market. Look, this wasn't the end of the market per se, you know, but you're going to have a lot of just overinflated names because of all the liquidity out there. UPWK, that's a nice name. Nice action in that thing. UPWK. Oh, wow. Wow. Yeah, Joshua, if I knew the answer to that, I wouldn't be here talking to you. I'll tell you that much. Nobody knows. Nobody knows, Josh. Nobody knows. Yeah, you just listen. If you don't have a bias and you keep your eyes open, you know, you'll be able to sidestep it with a limited amount of bruises. You know, if you're stubborn, and that's I didn't mean to single, you know, Noah out before, but comments like that, when you build yourself up with comments like that, those are the people who get caught in these things and get demolished. You know, when you say, "Oh, but Peter Thiel is in it, so don't worry about it." This is what happens. You know, you get caught in this. But that's, you know, if you're paying attention, because you're going to see signs in the flow, you're going to see cracks all over the place. You can't ignore them. You know, you can't ignore them. And you guys got to understand, it's okay to lose money. You know, you got to be willing to lose money. We're all, unless we get lucky and we're in cash to sidestep the pull, we're all going to lose money. There's nothing wrong with that, because hopefully you guys made a decent amount of money throughout this rally. You know, the main objective is to hold on to a good portion of it. That's all. Peter Thiel was in Tilray at 300. Stop him, Matt. Are you serious? Oh my, 300. I forgot it went to 300. Yeah, he takes shots all day long. You know, I remember when Peter Thiel was pumping Bitcoin near the highs and it got demolished back in the frenzy. Doesn't mean things can't go down. Peter Thiel's in them. You know, and Kathy too. Kathy's going to catch a nice beating. It's part of the game. It's part of the game. Yeah, BTWN. I know. That's what I was, that Noah was talking about, is Peter Thiel. I hope it works out. You know, I don't want to see anybody lose money, but I'm just saying, if you start to see SPACs not acting right, and this thing is going the other way, you know, you better be willing to take a nice hickey if you're going to hang in there. You know, you better be willing to take a nice hickey. But there'll be people that hold it all the way down to zero on all these things. Yeah, I'm not, and I don't know BTWN from anything else. I'm just giving an example. You know, I don't know. I'm being honest. I don't know BTWN, anything about it. You know, anything about it. The only thing I know is, again, a few of us traded it for a nice pop. That's about it. Looks good. I'm just giving the example that when the music stops, it doesn't matter. You know, just like it doesn't matter now. You guys see, nothing matters. It's all about the liquidity out there right now. Nothing matters. You know, nothing matters. So one more thing I wanted to talk about, because it's just more amusing than anything else. The 2009 analog, right? 2009, 2010, which has been pretty good. I like that name, Mo, AWH. Here's where we're at. I'll look at the AWH in a second. Hold on. Just for shits and giggles, let's look at this here. Because it's been close to on the money as you can get. No, tops are impossible, DD. They're impossible. Tops, your main goal for top should be to get out with the least amount of money you can lose. That's the goal. There's nothing you can do about it. Look, 2009 is a long time ago. I'm getting old. We're all getting old. All right, so here we go. So here's where we're at. 2000, right here. Okay. So this was off by a few percentages, whatever it is. But this was the GameStop saga we just went through. Okay. Slingshot back to new highs. See that? In like a melt-up fashion. And then here's the beauty of a correction. So let's see if it plays out. So right now, we are somewhere over here somewhere. That's where we're at, according to the 2009 analog. So let's see. Let's see. Again, this is, I wouldn't put too much credence into it, you know, but because of QE, this rally has resembled the rally we had last year to a T. To a T. Scary. Scary. So we'll see how it plays out. One more thing that caught my eye today, I noticed that I don't like to see, and sometimes it could be early. I don't know if you guys picked up on this. I know VIX was higher today, but this VVIX, which is the volatility, the VIX of VIX, you got a little up a couple days in a row here. You know, and this sometimes is a precursor, you know, so something to keep an eye on. I haven't really followed it in a long time because there wasn't really anything to follow. If you remember, yeah, usually it's a heads up, like where this was it here. So like before the Vixplosion thing, if you remember, that was when the Vixplosion, oh, that's not it. I got to go further back. Here. I think this was it, right? What year was that Vixplosion, for Christ's sake? 2018, right? Yeah, this is it. So this year. So this started to lift kind of like before, you know, shit hit the fan. Yeah, that's when the XIV blew up. So it's something to keep an eye on here, you know, something to keep an eye on here. Again, I don't know, commodities, maybe the commodity stocks end up ripping if the market comes in because of rates, you know, who knows? It's so hard to get a gauge on what's going on out there right now. But something to keep an eye on, you know, if this keeps creeping higher and you got some people shorting the VIX out there, you know, not to a huge extreme yet, but they can get caught. You know, again, I'm not talking about travesty here. I'm talking about a little volatility event, little pullback, maybe. Yeah, people are shorting growth because of the rise of rates. you know, because of the rise of rates. But, you know, I remember, John, 2009, the same thing people were talking about, and the total opposite happened, you know? We're in crazy times. We're in crazy times. 2009, people swore it was going to lead to inflation. It led to the total opposite, you know? So it's something I think you got to keep an eye on constantly. You can't get too hung up on. No, this is, as far as central bank policy, this is the craziest we've ever seen. You know, this is the craziest we've ever seen. But 2009 was the craziest we ever seen then too. Yeah, you know, not even the multiples, John. I can't, just off price performance, I can't buy these names anymore. You know what I mean? They're done. These eggs have hatched. Now, if there's a correction, that's a different story, right? We got a nice, healthy correction in these growth stocks, then you're talking a different ball game. But until they correct, I just can't. Tesla at 100. Tesla cooled off here. Look at this rip. Blew through this niner and finally topped out of this niner. I think we got a niner on SPX too, right? Yeah. We got a niner here, so be interesting to watch how it reacts. But you know what? If we blow through this and go higher, you know what's coming, right? You know what's coming. That'll fit the 2009 analog. You get a little lift for another week or so, and then there's going to be a nice correction. But if we can get a little breather here, that would be a lot healthier, obviously. So there's a big spot to watch here. Big spot. Nah, I watch Bitcoin for risk sentiment. Definitely Bitcoin. Tesla, I don't know. Yeah, Tesla's in its own little world. But yeah, Bitcoin definitely is a good gauge of risk and liquidity. All right, guys, a lot of things to keep an eye on here. All right. Again, for me, like initial activity and spots are the most important thing. You know, I guess you could say conservative in a way, but I'm just looking for new ideas, you know. But no matter what, we got to be on our toes and keep our eyes open. There are a lot of bulls in the air here. All right, guys. Good luck the rest of the week. Take some profits. Don't get greedy, huh? I'll see you guys tomorrow.